let's welcome on board Mr. Avinash Godkhindi, the MD and CEO at Zaggle. Avinash, hi, morning. Thanks so much for your time. And congratulations on this new agreement, the 7-year agreement with Visa. Help us understand a little bit more about this deal that you have inked and what kind of growth are you expecting from this partnership?
Good morning, Sneha, and thank you for having me on this show. I think it's a great deal. It helps us augment our program fees revenue. These are spends that we, in any case, generate on our platform, and Visa is supporting us with additional incentives, both as a sign-on bonus as well as additional spends for additional incentives for all the spends that we generate. So that's Visa's way of trying to lock in a certain degree of volumes from us because we work with MasterCard, RuPay, and Visa. And that cements the partnership. And we are very bullish about this as well. This helps us grow our business overall in a big way.
Avinash, hi, morning. Firstly, wishing you a very, very happy New Year. So let me take that out of the way.
Happy New Year to you too.
Thank you. Avinash, if I were to just try and understand how cross-sell works for you and whether this is a large cross-sell opportunity. You've got a huge opportunity to cross-sell, but has cross-selling really lived up to the kind of expectation that you have? Because from what I understand, there's around 20-21% of cross-sell that you currently do. How much of scope is there and how quickly can you ramp up the cross-sell opportunity?
Yeah, great question. See, ultimately, cross-sell is looked at in two ways, right? One is how many corporates are you penetrating into with a cross-sell product, and how deep are you going in that corporate? Our focus right now is to go deep in companies where we make inroads with cross-sell, because that's where the revenue and the profits really start to show up, right? So please don't go by the number of 21-22%. That's basis the number of corporates, but it does help us deepen our relationship with these corporates. And once I've sold a product, selling the second one is slightly easier. Selling the third, fourth, fifth becomes much easier because the visibility that our product and our company has with the senior leadership goes up to the CEO's level, right? So then you start to become strategically important for the corporate, and then conversations flow in a different level. So that's what we are seeing with our corporate customers, and we are more worried about how it reflects in our top line numbers and more so bottom line numbers, and less about whether that 21 goes to 65 or 21 stays at 26, right? That's less of importance, but to push more in terms of how it reflects in the revenue and bottom line.
Okay, so Avinash, just prodding a little bit more over there, this Visa opportunity, is that also another gateway to increase the cross-sell percentage of your total top line?
Yeah, absolutely. Because what it does is it helps us open doors with multiple banks, right? We already work with 19 banks. It also opens up possibilities for us to work with Visa and in the global markets. We're very bullish about the Middle East. You'll hear from us about our expansion in the UAE in the coming quarter or so, and that's something where these networks, both Visa and Mastercard, can again be very powerful and helpful. So overall, yes, it helps us in a multitude of ways.
Okay, Avinash, we've spoken about this in the past as well. Operating cash flow. Talk to us about when that turns a corner. Is there better visibility with regard to operating cash flow turning positive in significant fashion in 2026?
I think last year also we were positive. Just the September quarter, because of the festive season, mildly, yes. Mildly.
Yes.
We've already given a guidance that we'll break even again this year on the cash flow basis. And next year onwards, you'll start to see some serious, momentum build on the cash flows. These are things which take time, and we've been working on this relentlessly, and you can see the improvement in the last couple of years. The growth is also very robust, and so a growing business does require cash. So we need to balance the two out. We can't forego growth in market leadership. At the same time, of course, cash flows are all important.
Okay, and Avinash, earlier you did tell us that you expect revenue growth of 40 to 45% overall in FY26, EBITDA between 10 and 11. Are we on track for that?
Absolutely, absolutely. We are on track for that. And I want to highlight again, this is only organic. Some of our investments and our acquisitions, like GreenEdge, Mobileware, are doing stupendously well. So those all augment, to our bottom line as well as our top line, of course.
Avinash, on that note, do you expect to exceed the revenue that you had given us earlier? Any indication if you could give us?
I don't want to put myself in a
Sure.
spot right now.
Sure,
We are
sure.
absolutely on track, and I'll leave it at that. Yeah.
Okay. And your cash flow break even, are you on track for that as well?
Yes.
Okay.
Absolutely. Absolutely.
Okay.
Okay. Avinash, with regard to margins, there's been some delay with regard to pickup in margins. Talk to us about what's playing out, and you've guided for an aspirational 15% plus margin number. You've said that you'll reach that point by FY28, I believe. How comfortable are you with that guidance that you've given?
So firstly, let me clarify. We said 5 to 7 years for the 15%, 14 to 15%, margin growth, EBITDA, basically. And we are absolutely on track for that. If you look at our last year's guidance, we've said 9 to 10% adjusted EBITDA. We were able to make that. This year, we have given a 10 to 11% EBITDA margin guideline, adjusted EBITDA margin guideline, and we are on track for that as well. So again, the margin expansion takes time. It's operating leverage kicking in. There are investments that we need to make in, a lot of areas like AI, which are great opportunities. So we are just trying to balance all three: growth, EBITDA expansion, as well as cash flows, right?
Correct. And you're also looking at acquisitions, right, Avinash, in areas which you don't already cover. And you've got the advantage of penetrating geographies you don't cover. How much of that is already built into the estimate of 45% odd in terms of top line growth? And my sense is, and whenever we've spoken about multi-year growth of 40, 45 odd percent. How much of that is already built into that guidance? Just give us a pulse.
So this year, the 40 to 45% is completely organic, completely domestic, right? So there's nothing international coming in from there. There's nothing coming in from our acquisitions or investments per se. We've given a guidance of, in about 7 years, hitting $1 billion, assuming the rupee doesn't go completely haywire. So give or take, in that range, assuming the rupee stays reasonably in track. There, of course, we do bake in both international and, acquisitions.
Okay. And Avinash, recently you inked a partnership with AU Small Finance Bank as well for 3 services that you provide to them. And you've also guided for a 500 crore revenue recognition from this deal. If you could help us with the timeline here.
Yeah, so basically, Sneha, there are 2 different aspects. The AU relationship has 3 parts. One is the partnership for retail credit cards. The second is for partnership for corporate credit cards. And the third is for prepaid cards, right? We also will work with them to help them penetrate in markets, especially in the South, leveraging our corporate base. So there's a partnership that is shaping very well. Then there's another guidance that we gave of about 500 crores of revenue and about 50 to 60 crores of EBITDA coming in from the retail card business. The retail card business, led by our acquisition of Rio.money, which is now called Zag, really is not just AU's retail partnership. They already have a running partnership with Yes Bank. AU comes in, a couple of other retail card partnerships with fairly large banks are on the cards, and you'll hear about them in the coming quarters. And all of that put together in 5 years would be 500 crores of revenue and about 50 to 60 crores of EBITDA. That's in a 5-year time frame.
Perfect. Avinash, apologies if I keep coming back to this, but I believe one of the key triggers for investors and the stock price will likely be that operating cash flow turning significantly positive. When you're talking about significantly positive, the expectation likely is FY27 from what you're suggesting. Will the EBITDA to cash flow conversion be 100%? More than that? Less than that? How does it appear broadly?
Sorry to sort of disappoint you here.
Sure.
See, these things, all good things take time, right? That's my philosophy. This is brick by brick. This is step by step. So yes, operating cash flow in 27 will start to look more healthy than what it is today. But for us to get to a higher percentage as of EBITDA would take a certain amount of time. It's not going to happen overnight. It will take certain amount of time, and I'm not even going to say that it will hit 100% or something like that, but it will be healthy in the coming years. That's how we would like to position it.
Perfect. And Avinash, I have asked you this question in the past, but for the knowledge of viewers, why is operating cash flow lagging?
Yeah, simple, great question. I think whenever we are in a B2B business, you have receivables from both corporates as well as banks. Banks take a good, 30 to 60 days to clear those invoices, depending on the bank. And the invoicing itself happens with a lag, right? So if you spend on the first of the month, the invoicing would happen by the 7th of the next month, right? So there's a certain amount of lag there. We are working with banks to try and start invoicing twice a month, and we are trying to get invoices cleared faster. There's also a lag in some of the invoicing that we do for corporates, and there, certain businesses have, a tendency of working on a redemption model like our Propel Points business, and there also some of our cash flow gets deployed, right? So all in all, both corporates and banks do have that tendency to, take their own sweet time. But we work with these partners and try and expedite these things. Older partnerships, older banks, older corporates tend to pay faster. The newer ones tend to take a little while, and we're trying to streamline all that.
Okay, Avinash, great to chat with you and good to have you on the show today. Thanks so much for your time.
Thank you. Thanks for having me.